Hello, welcome to the weekly chart review. I'm Selena Nicholas, technical analyst at xm.com. Today is March 23rd, 2016. Now let's start with Euro USD. Looking at the longer term chart, we can see the pair doesn't really have a clear trend. It's been moving sideways in a range, no direction in the past year. If we look closer to a shorter term chart on the daily chart, in early February, prices rallied to 1.1375, fell back down, and then this pattern was mirrored when prices rallied from the beginning of March to peak at 1.1341. This was March 17th, and then prices turned back down again. So more or less, the pair has been in a range as well. Looking at the moving averages, they are 200 days flat. They're mostly flat and sideways, indicating the market is trendless. The outlook for the next couple of weeks is viewed as neutral, and the pair is expected to trade within a broad range between 108.50 and 1.1375. Now let's look at the British pound against US dollar. The up move that started from the low of 1.3834 back in February 29th has topped out at 1.4513 on March 18th. So GBP USD has retraced half of this up leg so far. Today prices dipped just below the 50% Fibonacci level, and this level is at 1.4174, and there is scope for further downside to 1.41. If we look at the RSI, it's dipped below 50. It's entering bearish territory, which also suggests more downside momentum. The market is also below its 50-day moving average. This highlights short-term bearishness. Now if we look at the longer term outlook, the current movement is viewed as part of a broad sideways consolidation range. Further choppiness can be expected in the next couple of weeks, likely holding between 1.40 and 1.45. Only a break below this February low would see resumption of the downtrend. Let's turn to dollar yen, USD JPY. It's consolidating just above the key 111 yen level. The failure to rise above 114.50, which is the top of the range, and that was tested a few times. So failure to rise above this will likely keep the pair under pressure with scope for another leg lower, especially if support at 111 fails to hold. RSI, it's still below 50 in bearish territory. Also, MACD, it's below 0 in bearish territory, and the moving averages, they're negatively aligned and they're falling. So this is highlighting the bearish bias. If we look at the longer term chart, we can see the outlook remains bearish as the market fell below its 50% Fibonacci level, and this is the up leg from the July 2014 to May 2015 rise. So the bounce from 101.07 to 125.84, and the market has retraced just over half of this up leg. And if we look at MACD, it's trending down, it's below 0, also highlighting the bearish outlook for the long term. Thank you for watching and have a great day.